Hi everyone, welcome to QBO Tips. How many of you require your customers to give you a down payment before rendering products or services or anything like that? Because that's what we're going to tackle today. Yes, there is a deposits feature in QuickBooks Online that you can turn on. You can actually see on this invoice that I have open, right down here I have a $25 deposit shown on this invoice. But this feature is kind of junk. All this does is add $25 to your undeposited funds, which is not where it needs to go. Most likely this $25 is already in the bank by the time you invoice. So again, it's kind of garbage. Well, how do we actually record and track customer down payment then? I have an answer for that. First, we need to set up two things. We need to set up a customer down payment liability account first. This is going to track the liability, the down payments that you have received to see how much money you owe your customer, because if you don't provide, you owe that down payment back. So I'm going to do, it's typically an other current liability. Customer down payments. So once I have the customer down payments liability account set up, I need to set up an item to use on the sales forms. This is how we're going to track it essentially. So when I go to products and services, I can create a new non-inventory. You can use a service item as well if you want. It doesn't really matter in the context of what this is doing. So then we're going to map the income account to that customer down payments liability account we had just set up. So let's save and close there. So I'm going to go back into Amy's and use her as my guinea pig here. So let's say Amy gave us a down payment on some work. The easiest way is to just use a sales receipt to record receiving the initial down payment. So I'm going to use my customer down payment item. Let's say she gave me $100. It's not taxable, obviously. So I save and close this, and I have $100 sitting in my customer down payments liability account on my balance sheet. That's exactly where it's supposed to go. Everything's working right now. So the second thing we need to do is once we get to the invoicing stages, we need to apply this $100 down payment onto Amy's invoice. So we create an invoice for Amy. I'm just going to add the little time that's hanging out here. So you will see that it's $375 on the invoice here. That's what the subtotal total balance due. It's $375, right? So now I'm going to use my customer down payment item again, but this time I'm going to do a negative $100 to take it out of that liability and also to reduce the amount that Amy owes on this invoice. It will also have the benefit of showing Amy when she looks at the invoice that we do have her down payment and it has been applied to the invoice. So all of the information is sitting right there for the customer. No confusion. We can see we're at $275. And we would just send that invoice to Amy. Now we've created, tracked, and used our customer down payment. The last thing I have for you guys real quick here is on figuring out if we have applied an earlier down payment or if we missed one for Amy, let's say. So I'm going to go to reports in my balance sheet and I'm going to look at my customer down payments account. Now I can see pretty clearly here that I have Amy's coming in and Amy's going out. But if you're tracking multiple of these things, you can also customize and do a filter by customer. So if you're looking for a specific customer, you just filter it by that customer, you run the report, make sure your dates are all dates or something applicable, and that will tell you what the balance for that customer is. I hope that helps you guys. Thanks for watching.